A sharp fall for oil prices. What's your reaction? Is the market prematurely celebrating a diplomatic breakthrough?
Well, firstly, thanks for having me. And it perhaps is a little bit too early to say whether we're going to have a breakthrough. If we look at the oil price time series for the past couple of months, we can see ebbs and flows of oil prices as we've neared a breakthrough and then backed off a bit. It does seem like there is progress. President Trump appears to be optimistic, but we've seen this story before. Nevertheless, if things do materialize, it is coming just in time for the winter in Europe, for example, or for Southeast Asia, where oil supplies are reportedly running relatively low. So it is good news, but perhaps a little bit too early to say whether it will ultimately cause a breakthrough.
And experts say that even if a deal is signed, it will take 3 to 6 months to restore the status quo for production and refineries. So walk us through that timeline. Why can't the global oil tap just be turned back on instantly?
Yeah, that's absolutely right. And there's a couple of aspects to this. The primary one, of course, is simply that it takes time for shipments to get from place A to place B. They can't materialize instantaneously. And that does mean you get a flow-through effect. So you need to get the shipments, for example, from the Middle East, so coming out of Iran, as it might be the case, or just coming through the Strait of Hormuz. You need those to get through to refinery processes and then to be refined and then go to their next step. So you've got a whole lot of steps that need to take place. And that means that it's not just the shipping time, but it's also the refining time and then the shipping time after that. And each one of those, even if it's just really short, each one of those adds on a few days and it all piles up. You add on to this the fact that for all flows to persist, you need a baseline level of oil in the system below which you can't really go. Otherwise, for example, pressure starts to create an issue. And as a result, you need to keep some oil in reserve that can't immediately be tapped. And what this means is effectively it takes time for the oil supplies to build back up to a space where you've got enough usable supply for people to be able to access it.
All right, and we've seen a massive shift in global energy flows, of course, with the Atlantic basin exports surging to fill the void left by the Persian Gulf. So once the strait reopens, does the US keep this newly won market share in Asia, or do trade flows snap right back to the pre-war norm?
That will be an interesting one to see what happens there. So the United States clearly has filled the gap. But not all oil is created equal, by which I mean some oil has significantly lower production costs than other oil. So if the United States has a higher production cost and then the world price goes down, well, some production is going to go offline. And ultimately, some production in the United States is more expensive than oil coming out of Iran or other parts of the Middle East. We can think about this just in terms of labor costs. The United States has significantly higher labor costs, meaning they're going to need a higher world price for it to really be viable for some of that production to occur. So I would expect some of the US market share to pare back. However, it probably won't decrease entirely back to the prior level, at least not immediately, in large part because some oil suppliers will be wanting to keep a toehold in markets even if they're not making a significant profit from it. That is, they'll want to maintain that option to increase supply in the future, now having obtained that option. So we're going to see the US market share decrease a little bit, but I don't expect it to eliminate or go back to exactly the low level it was before the crisis.